It's official. We're live. Good morning. Happy Friday. Welcome to the Zoom. Welcome to Scary Bookkeeping Stories. Google has a new security feature. No, this is just through Zoom, though. Anybody who's registered, if I update the time of a webinar, which I had done here, it sends an email out to anyone who's registered. Nothing to do with Google. So yeah, I bet, Megan, though, that other people are running into the same thing you did.
But it doesn't update it on the calendar. I think that's the point that she's.
Oh, on the calendar.
Because on my calendar, it still says Airtable.
Oh, I see.
And in fact, for next Friday, so for next Friday, I have the same invitation for Airtable.
Okay, so basically you had Airtable twice and you just didn't have Scary Bookkeeping Stories at all?
Yeah.
Oh, because when I sent the update out, there was no opportunity probably for you to kind of add that to your calendar. Good morning, Douglas John Walker in the live Facebook feed. Wait. So yeah, that's probably what's going to happen is people are going to go to the wrong one and then they're going to sign into the right one. Like here comes Linda. So Linda, I was thinking of you yesterday. Because I was writing something and the word instigator came up, right? And so I thought of creating a meme with a photo of Matthew and a photo of you side by side. And the caption under Matthew would be instigator and the caption under yours would be alligator. Instigator, alligator.
Oh, no.
No good?
Angel would be better.
But instigator, alligator has a nice ring to it. They kind of go.
That's what I thought of right away.
So we could like take a bet. I already been asked by scaling people not to take him to an alligator before the conference, just to wait till after. So I will.
I think what we need to do is somehow buy like a really expensive book on alligators and send it to Matthew. Like something that really like goes through like all different kinds of alligators, different parts of the world, whatever. I don't know. There's got to be like a National Geographic book on alligators that we can find.
I think he really is afraid of them too, honestly. I think he's really afraid.
Really? Maybe we can send him like a live baby alligator somehow if it can be done safely.
I can grab one for him right here. Right, Jessica? She knows.
You just have to get him in the right habitat as you send it off to California.
But not till after the conference. They really have him on a lot of sessions, so they don't want me to feed him to the alligator ahead of time.
I saw 4 sessions. That's crazy.
8. Like 8.
Oh, 8? I thought I saw him post that he had 4 sessions.
Well, I think he's got 8 in total. We've got 2. We're doing the beginning one with Ingrid, the ending one with Ingrid, and then I think he's got 4 or 6, maybe he's got 6. And then we're interviewing the vendors, and then he just filled the whole conference. Like we have no time to do anything, like breathe. So
gotcha.
I can say stop asking and offering us to do stuff. Really fun.
It's honestly insane to me that they're actually doing a conference in person. No other conference is doing it in person for the obvious reasons. I'm shocked that they're doing it, and I'm shocked that people are agreeing to go, to be very honest. I wouldn't go.
Oh, there's 10,000 square feet. I forgot, there's gonna be 20 feet between the presenters and the people. Everybody has to wear masks. There's a whole bunch of protocols.
Yeah, you can put all kinds of protocols in place. That doesn't mean people are going to follow them. Right?
No, that's true. But hopefully we will.
Yeah. Yeah, I mean, I could just see like, presenting after a session and people want to come up and thank you. And they're just going to, because they're in the moment, they're going to forget that, oh, wait, we probably shouldn't be doing that because that's, anyway. I'm surprised, honestly, that they would do this, but it is what it is. I wouldn't go. Anyway, we're here to talk about scary bookkeeping stories this week. And this has become a tradition. I almost didn't do it this year because I kind of felt like, all right, we've done it every year. Maybe it's getting old. But then Greg encouraged me and said, no, you're not going to do scary bookkeeping stories this year. And I said, well, if so much as one person brings it up that, like it'll be missed, then I said, okay, that's all I need to hear and to know to say, all right, it's worth it. And we'll just, forget it. Tradition is tradition. We got to stick with it. Right. So if nobody else has a good story to kick us off with, I'll start with one that I frequently like to share, but anybody have anything to kick us off? Otherwise I'll do it.
Go for it.
All right. So this is, and I've shared this story before, but it's just a good one, especially to kick off something like this. And I think get people kind of in the mood and thinking about, maybe some of their own experiences that they can share. Of course, remember always the rules of engagement, names withheld. We're not here to call anybody out or throw anybody under the bus. Just share generically without the names. Just to get the concept across of, what these things are that we've encountered.
That's no fun.
I'm not even concerned about the liability. I'm concerned that people are going to get in trouble themselves for sharing these stories. So years ago, I had a client who, and this was back in the days when I was seeing clients in person for the most part. And this one client came to me, and actually they came to me the first time, and I talked to them, and they didn't end up signing on as a client. They went another way. And then like a year later, they came back and they said, hey, we'd like to engage you for your services again. We did end up, when we spoke a year ago, hiring another bookkeeper. We decided to go a different direction. She was much less expensive. And that was that. And so I could already kind of see the writing on the wall. And they said, even then, they weren't upset with her work. They just said, she was so inexpensive that she's gotten really, really busy and doesn't have the time for them. So mind you, by then I'd raised my rates since the last time I'd spoken with them. So I told them this, and they said, it's fine. We get the value, as long as you're able to pay us the attention that we need, we're happy to pay the rates. I said, okay, great. And I get started. And the first thing I do is I meet with them, and there wasn't going to be enough time, and they needed to run their business. So long story short, I took all the paperwork back with me to work on it in my home office. And so I'm going through their bookkeeping, I'm going through their bank statements, right? And I'm kind of checking the bank account reconciliations, and I'm seeing in their operating account and comparing that with what's in QuickBooks. And I'm seeing these very even amounts that are booked to payroll expense. And I'm like, well, that's weird. Like the gross pay I would expect. And at first I thought it was a good sign. I thought in a rare situation, somebody was actually booking payroll correctly, because you would expect the gross amounts to be even amounts, but the net checks already shouldn't be even amounts. So even that, pretty quickly, I was like, something doesn't look right here, right? So I would just continue, kind of reconciling the accounts. And as I'm going through, I'm noticing that as I compare the amounts in QuickBooks that are booked to payroll expense at these very even numbers that should be net pay, so they should be very not even. And I'm comparing that with the bank statement. I'm looking at the detail on the bank statement, and I'm noticing these are not payments going to a payroll service of any kind. They're actually transfers to another bank account. So I go to the client and I say, hey guys, what gives? This is weird. And they said to me, oh yeah, we the former bookkeeper, kind of set this up with us where, we transfer the money to a payroll account to cover payroll. And since we know it's all going to be used for payroll, we just book that as our payroll expense. And I'm like, really? A bookkeeper told you to do that? And so right away, I'm like, okay, so we have a whole entire account missing from the books and all kinds of other problems that go along with that. And of course, I had to explain it to them. They don't understand the accounting. They're not accountants or bookkeepers. So I had to explain it to them in a way that they weren't going to feel like I was throwing the other bookkeeper under the bus just to justify, extra time and billing and whatnot, because those days it was still by the hour. And I did, and I got them to understand. Luckily, the company was run by two brothers, and they're both really smart guys, even if they didn't have an accounting background. So they got it when I explained it to them. But it was fascinating to me that somebody in our profession, would be okay keeping the bookkeeping this way. So not necessarily fraudulent, but definitely negligent at best. And scary to think that a professional in our world would actually go as far as to say, yeah, this is going to work. We can book payroll this way, So of course our payroll expense is overstated. Our employer taxes is not just understated, it's zero. It's non-existent, right? Because we're just booking the whole amount of all the transfers to payroll expense. No accounting for the liabilities that were taken out of paychecks. Just so much wrong with that picture. And that's my first scary bookkeeping story. I think I share that one just about every year when we do this, just to kind of kick us off and get everybody going with ideas. So there you have it. So who's next?
Well, this kind of goes in line with with what we were talking about in 97 and up last night, which is, we don't know what they don't know. And so I'm trying to come up with a list of things that clients do that are like nails down a chalkboard to us. I had the situation yesterday where we couldn't get a bank feed to connect for the longest time. And, after repeated messages to the client, oh yeah, I closed out that account and pocketed the money. Well, you gotta let us know, you gotta work with us here, help us help you, sort of thing. So that's one of the things that is like a pet peeve of mine. And so I'm also curious if people have other sort of pet peeves that clients do that's like nails down a chalkboard to you.
Anybody got anything?
I like when they tell you they didn't enter something and they don't realize there's an audit log. And then you pull the audit log up and I screenshot it. Sarah taught me that. Screenshot it, just send it back without any words. I didn't enter that. And then you're like, there you go.
According to this, you did. Yeah.
But the worst part is when you attach an app. So if you're the one that attached HubDoc, I attach Lien Law, and then every transaction that comes out of that app says I did it.
So suggestion on that, this is from Doug Slater years ago. Whenever you're going to connect apps, create a separate user account for the apps. That way they're logging in as that. You can even call it apps@yourdomain.com. Set that email address up or alias so that you can link those apps through that way. That way you know when it's the app that's posting something for sure.
That's a good idea, because what I do is in the first training, I show them how to connect it by disconnecting it and then have them connect it. I always say, who in the group here wants to be the guinea pig? Because you're going to be the one that anything that comes out of this app says you did it. And they're like, oh, I'll be that one. I'm like, you probably won't want to be, but yeah. So you just disconnect it, reconnect it. But I don't know if everybody knows that happens, that the person that connects it is now the one that, they're like, you entered an invoice at 2 a.m. I'm like, no, I didn't. Eastern time. No, I didn't. But yeah, I had a client one time that connected an app and he didn't set it up right. And he came to me because he had 50 pages of undeposited funds.
Oh my God.
He couldn't figure out why his income was so overstated because he had been downloading everything from the bank feed, but he had 50 pages. So there's like 50 or something on a page. He had 50 pages of that hanging. It was fun. That's pretty hard.
My favorite thing, another one of my favorite things, and I think, Greg, this goes back to examples of the things you're looking for, which was that I've had clients over the years who they just book payments to credit cards as like a business expense.
The whole payment?
Right. Instead of actually tracking the activity on the credit card, they're like, well, we use this credit card for office supplies. So we just book the payments on the credit card.
Other business expenses.
Yeah.
I hate the other. How about when you ask them about Amazon, they just don't want to ever go back to Amazon and figure it out if you don't have the app. So they just go, it was all pretty much office supplies, or, it all pretty much went on client XYZ. I'm like, all pretty much? Like, I've got all these transactions here.
Yeah. So the way I like to give the clients a reality check on these things is I'll say, okay, so imagine we're sitting here in the room and there's an auditor here who's scrutinizing the books. Now try making that statement again, visualizing the auditor sitting there and how they're going to react to that statement, and when I paint it that way, a lot of times that's when they kind of get like, okay, they might think I'm being ridiculous, or, they might think it's overkill, but the reality is they understand that my job is to protect them. Right? Mm-hmm. A client is somebody who's under my protection. And that's what I'm doing. I'm protecting them. And sometimes we have to protect them from themselves. And they just, like Greg said earlier, we don't know what they don't know. And oftentimes they don't know what they don't know. Right?
Exactly. We had one time with the guy was there's a contractor, really bad about receipts. Spent a lot of money fixing his trucks. He had the aging fleet of vehicles, spent thousands of dollars, and we had an audit. He had no receipts. They disclaimed every single one of those. He did not get to take any of those expenses.
Wow.
They took him away. And that was a big life learning lesson for him. After that, every piece of paper went into the, attachment. So yeah, they took it all off. It was like 10 or 15,000. This is going back, but it was still a lot of money for that firm to
I'm
lose
sure,
and you had to pay
yeah.
taxes on. So
Yep, and the
important.
back interest and penalties because they
Yep.
treat it as though you never had the deduction and just didn't pay the taxes on time.
Mm-hmm.
Yep.
So yeah, a lot of people will say, well, it's on my business credit card, so therefore it's a business expense, and they don't realize that.
Well, and a
Some other
common one is
time-
they say, why do I need the receipt if it's on my
That's
credit
what I
card?
mean,
Yeah. And of course the answer is the credit card statement doesn't explain what it was, what was actually purchased. I could go to Staples and buy popcorn,
Yeah.
right? And the charge is just going to say Staples, and
Ever had anybody who used their personal card and then they paid it, and then you're like, "What's this? What is this?"
Yeah.
You never had an Amex card before. All of my personal, but it was business stuff, so I paid it. And you're like, "Okay, well, what was it?" And
So one of my favorite stories along these lines was years ago. I went to see a client, and I started working with them, and I'm just kind of combing through their books, trying to see what needs to be done, clean things up. And, I had a whole conversation with the business owner, and we were talking about like just what was going on in his business and any major expenses and things. And, looking at the balance sheet, I'm like, is there anything, missing from here? Are there any like, vehicles, trucks, whatever that should be put on the balance sheet? Those kinds of, I'm sort of doing a very light version of what, as an auditor, we used to call like the search for unrecorded liabilities and assets, right? So we're looking for things that aren't there, which is a little bit harder to detect. And so when we're all said and done, he says, yeah, no, everything's fine. Just make sure the bank accounts are all reconciled. And then I just need an update on my balances so I know where I'm at. And I said, okay, no problem. So I'm going through and cleaning up and reconciling his bank statements. And I see these huge payments to a company that, based on the name of the company, I have no idea what this could possibly be for. And I'm thinking, is this like, maybe it's just a major withdrawal? I mean, the guy made a lot of money. So I'm thinking maybe he's just drawing big chunks of money out, and it's for personal use. So I go to him, and remember, I gave you the context. We had the whole conversation around anything major that might be missing. So I go to him and I present him with the list of huge payments to this company. And he says, oh, yeah, we just bought a private jet for the company. And
I'm like, need to know about that.
Yeah,
I tell you.
I'm like, really? You didn't think that was significant enough in the balance sheet conversation that we had? So that was funny. You see a lot of that kind of stuff. I love how many clients have come in our doors and said, I only have one credit card for the business. And then you're going through the banking and you see payments to other credit cards. And they're like, oh, yeah, I forgot about that. Oh, yeah, I just opened that other account. It's like it jogs their memory.
I worked at a firm. Well, this was before my business. So this is like probably 30 years ago. And the guy, the bookkeeper, I didn't get much of a story on what happened to the bookkeeper other than she wigged out and left. Started working for him. He was another contractor, piles of papers. Like he saved every pink. Remember the pink notes you'd write the messages on? Those like, when you'd be back and all that. He had to save them all. And they were in a pile against a window in his office. And he had boxes in the bookkeeper's office. And the boxes said like 1997, 1996. That was his filing system for the whole year. He just threw everything in this box. So I get there, and the week I started, he had an audit on sales tax in Rhode Island. So the kid comes in, the auditor, and he looked like he was 12, and he comes in, and I'm like, he's coming in, and the guy says, I don't care, I have nothing to hide. So they put him in an office, gave him coffee, took really good care of him. He spent a week there, and the kid, I didn't know where anything was. And I'm like, what year are you auditing? Here's your box. And I put the box on the table. So he was there the whole week. At the end of the week, he said, I need to talk to you about a few things. And I'm like, okay, but remember, I just started here Monday. And he's like, okay, he pulls his paper out. The guy had bought a truck. So he bought a big truck. This is a big GC kind of contractor. Big truck. Stapled to this was the bill of sale and the taxes that they paid on the truck. But the bill of sale said he paid $1,000 for this old truck that they bought. But underneath it, the bookkeeper stapled the $10,000 bill of sale, what they actually paid for the truck. So she stapled it. She was very organized, but I handed him the box. So I had no clue. And they're like, he paid $10,000 for this. And I'm like, yep, kind of looks like he did here. And, and then the guy had the guy he bought it from write it up for $1,000 so he could take it to the state of Rhode Island. It's like, so they got in big trouble for that one.
That's funny. But wait, so he he said he paid 10,000 and only actually paid 1,000.
No, he paid 10,000, but he had the guy that sold it to him write it up for 1,000. That the
Why
sale
would he
was
do
only
that? I would think he would want.
So you don't pay the sales tax on the
Oh,
10,000.
right. He was avoiding the sales tax, but then he doesn't get the benefit of the deduction. I wonder which one cost more.
Yeah.
Because if you're saving the income taxes on $9,000 or anyway.
He paid cash or something. It was some kind of a weird thing that he did. I don't know. He was
Right.
I didn't stay at that job very long. I couldn't deal with the messiness of how everything he did. And he had a really cool dad who kind of came in, and he was retired, and he's like, I had 4 sons, and this one is just the slob one, and the other ones were all neat like him. And he goes, I don't know what to say about him. I'm like, I can't deal with this I can't work with somebody. I realized I couldn't work with somebody that wasn't at least somewhat organized. It's my job to be organized, but he was just, the box thing. And he literally just threw everything in the box, and the box was the thing, which we probably all had clients, right? The shoebox clients. We all had those who've been doing bookkeeping for a long time. They just would mail it to your door, and it would just be a pile. And they wouldn't even take time to sort it. You had to start there.
I mean, at least you had everything in the same box. I suppose you could take it out and organize it yourself easily enough, right? I mean, it just depends how much volume of papers were in there for a whole year.
Sometimes a lot.
Yeah.
And you can't train anybody. I used to buy certain clients, I would buy the little folder, and I'd label all the little things. They said, just as the year goes on, put them in the little buckets. They shoved it all in the front and sent me back the envelope. You can't
That's
train
funny.
them.
Well, at least these days we have Fujitsu scan snaps
Yes,
that we can
thank God.
scan that box pretty quickly. And I still it's funny, I still use shoeboxed.com for one client where his assistant it's funny because I almost canceled it recently because I checked and nothing had been sent in there at a really long time. And so I talked to him, and then I emailed his assistant, and I said, hey, we're not using Shoebox, so I'm just going to cancel it. And, I guess we can just scan the documents. And I think the prospect of having to scan all the documents was very scary for her because it's a lot, and so she got on the ball, and all of a sudden sent in 6 envelopes worth of stuff to Shoebox. I started getting the email notifications. What?
That's a good service, Shoebox.
Oh, they're great. They
take care of it for you. Yeah.
Yeah. And they have great integrations. For a long time, I was using it with several clients where, like clockwork, the documents would go in, and I had it linked to Evernote. So automatically, as the documents came online, it would download to Evernote. And so Evernote made it really easy to track and find information because Evernote, everything is searchable. So I could literally search for an amount. And I remember how cool it was when I first started doing this years ago that I can search for a dollar amount in Evernote, and I would even get bank statements that had that transaction on it as well as the receipt. And so really, really cool stuff. I mean, these days we have sort of better systems for that kind of thing. But in those days, that was just awesome, especially when I was doing when reconstructing somebody's books, and I would get all the stuff uploaded and into Evernote before I'd start the work, because this way I could find everything I needed to get everything recorded properly. So it eliminated a lot of the uncategorized back and forth, that you otherwise have to do with a client. So that was great. One of my other favorite fun ones that comes up frequently is, the ATM withdrawals. When they say, oh, ATM withdrawals are all travel expenses. And again, I have to kind of do that auditor scenario with them and basically say, okay, so prove it. Pretend there's an auditor here and prove to me that was spent on travel and that you didn't just take it. And, it depends on the kind of client. Sometimes I'll joke with them and say, how do I know you didn't take that money to Vegas or, somewhere else nefarious? And I just joke with them like that. And so then I explain, of course, the process, that look, when you take ATM withdrawals, we're going to call it a distribution, come back with receipts for what you spent it on. And then we can book the entries to get that stuff effectively back in there as expenses. Let's see. Jessica says, I encountered a scary one this month doing a 2019 cleanup, and the client has a huge and growing sales tax liability in the books despite filing and remitting sales tax every month. Upon further research, their previous bookkeeper told them they needed to charge sales tax on the entire invoice, which includes non-taxable services, but they've only been remitting tax on product sales. Wonderful. So they've been overstating their sales tax liability.
God. That's awful.
I mean, at least it's kind of an easy one to fix because you just go back and adjust the difference, but what do you call it? To income. Basically, it's money that needed to be picked up as income.
If if you were, I've never experienced this, so I don't know. If you charged sales tax and you have a line item that says, I charge $500 of sales tax, but only $100 of that was actually true sales tax on the product. Because it's a separate line item, isn't that supposed to still be something that you remit back as excess sales tax to the tax?
There's two ways to handle it technically. So the way I just explained is the simple shortcut way, which is just pick it up as income and pay the taxes on it, right?
Sure.
But you're right. Technically, there's two ways to do it. Either refund the money back to the customers and say we charged you too much sales taxes. That's really the best way. Or you can send it into the government and say this is excess sales tax that we collected. You can do it both ways. I also love when I see a client's books and I see that all the sales taxes they pay are just getting booked to a sales tax expense account on the
Oh,
book.
expense account. Yeah. See that one a lot. Or loan expense. We see loan expense a lot. And you get in there like, oh, I do my own books. I just work with a guy that's really brilliant. And he's like, I'm doing my own books, but I don't think they're quite right. We got into it and I'm like, oh my God. Like rocket scientist, brilliant kind of guy. But yeah, he had all the typical things that you see all the time that it's like
the car payment line item,
car payment. Yeah. Everything. It's like, wow. Okay. Yeah. Well, and then he's like, and I just want you to fix it and train me. And I'm like, oh, I don't think so. I'll fix it. I'll fix it. But you should just do what you're doing because you're making a lot of money doing what you know how to do. This is not your game.
Yeah.
But you get people like that.
That's funny. One of my first jobs when I moved to California was for a big, at the time, publicly traded company. They went private, and then I think they actually went back public again. But I was, a revenue accountant for this company, and I had taken over. I started there as a temp, and then eventually got hired. I got hired full time, but not for a while later. So at this point, I was still working there as a temp, and I'd taken over this territory of locations for this big company. And a big part of my responsibilities was, of course, managing and reconciling the banking for every one of their locations in my territory, which included all of California and a few other places. So this one hospital I'm doing the bank recs for, and the deposits just aren't tying out. They just never tied. And as I'm looking at the bank recs historically, the accountant who I'd taken over for, and he was still there. They just moved him into a different area. He was just leaving deposits in transit. He was frankly being lazy. Instead of trying to figure out how they should tie out, he had deposits in transit going back months. And I'm like, that doesn't make sense. Money is, first of all, the policy at the company is they have to deposit the stuff like next day. Right. And even if they took 2 or 3 days, by this time there should be no deposits in transit. They should only ever be deposits in transit for maybe, 2 to 3 days. If it happened to be that the month cut off on like a Friday and they didn't get to the bank till Monday or Tuesday, right? That's the longest lag we should ever see in a deposit. So it was bugging me, and this was my OCD kicking off. And so what I started doing was I started putting together an analysis, and I started going into the system for the company that tracks all the records from each of the locations and laying out each day's deposit and what it should have looked like in detail. Because we had the cool thing, and this was a smart thing, I think it certainly, played out its part in this analysis, that they had separate bank accounts for credit card transactions that were processed from customers versus cash and checks. And so this way, it was easier to see and less likely for somebody to manipulate the credit card stuff, right? This actually helped in this analysis because I was analyzing a bank account that was for the cash and check deposits. And what I did was every day I laid out in different columns the check portion and the cash portion of each deposit, and of course the total. And then I was trying to compare that side by side with the actual deposit amounts that went to the bank. And I'm sort of, and it could be mismatched. There could be things misaligned because, there's a timing difference, but little by little, I'm able to start kind of piecing this together. And as the analysis sort of came together and it spanned quite a few months, I started seeing a pattern in that the cash portion of each deposit was the exact amount missing from a lot of the deposits. And you would see where it would be missing in the beginning, and you could really see the trend. In the beginning, it would be missing one day, but it would be made up maybe like a week later or something. Like a week later, a deposit would be over by that amount. But as time went on, there would be the cash portion missing and it would never get made up. Right. And so you could kind of see the pattern. It was clear somebody was borrowing money from the location, and initially they were replacing it, but then they didn't replace it. And then over time, it accumulated to north of $20,000 in cash that the person had stolen from the location. Amazingly, when I brought this to my boss's attention, and then he looked into it further, and he got the controller of the company involved, and they looked at it. They called the person in, who was the manager of the location, who was ultimately responsible. And to my shock and dismay, even, they did not fire the person. They moved the person to a smaller hospital. And there was clearly something going on there, because it was the owner of the location who had sold the location to this big company years before, I guess was very friendly with her, close with her, whatever. And he said, and he made a stink and said, I do not want you firing this person. And so instead they put her in a smaller location, which you would think after that whole experience and having been confronted about it, they would have stopped. But nope, didn't stop. It stopped for a little while. And then eventually, and it was still in my territory. The location was still within my territory. So any reasonably intelligent person would have said, hey, obviously I'm being watched. The same person who figured this out is probably watching me now and watching, maybe I should not do this anymore. And sure enough, the person did it again. And then when we uncovered it again, they had no choice. They had to fire her. But that was amazing to me. And because there were so many ways that they could have made it harder for me to figure out. Like, don't take the whole cash amount out. Take some of it out. Take different amounts out. That would have made it much harder to line up.
It's better to skim than it is to just steal.
100%, because it made the audit trail really easy to put together and see so clearly. Because like I said,
be caught.
Yeah, it does seem like they want to be caught. It's true. I mean, there would have been so much smarter ways to steal money, which of course I don't want to teach people how to steal money, so I'm not going to get into that. But yeah, it was amazing to me.
Couldn't we do a whole show on that?
On how to steal money?
That might be liability. We had a girl do something similar, but we caught it really quickly. It was like we caught it like the first day, because we were reconciling that way, right? Like the cash, the checks, the credit cards working out. Mm-hmm. But we had this very sophisticated method of, like, we had to write it on a sheet, the cash that came in to the office that day. And she used whiteout. She used whiteout to try to white out the amount of cash received.
That's hilarious.
But she ended up going to jail. Like she spent like a couple of days in jail because of it.
Yeah, we had another manager of another location in my territory was doing something similar, and they actually had to send the sheriff's department to the person's apartment. And from what I was eventually told, when they went into her apartment, they found like all the deposit records like spread out all over her floor. Like she was trying to create some intricate system for how to do this and not get caught, but it obviously backfired. And so it was, I mean, they really found a smoking gun when they went into her apartment, and they found all the evidence as clear as day, apart from the audit trail that I put together that confirmed it. And it was the same thing. And I think that's what happens is they start thinking, let me just borrow a little bit of money. Then they get away with it, or they think they have. And so they start borrowing a little bit of more money, and they think, I'll replace it. And unfortunately, in my experience, it's usually one of two reasons that seems to trigger somebody to do something like that. It's either a drug problem or insurmountable medical expenses. That's been the two most common things that seem to lead a person to do something like this. Couple that with some entitlement issues. They feel like they deserve the money, they're owed the money. That's how they justify and rationalize it in their minds. And then they think, that's how they justify it. They think I should, I'm just taking what I deserve. I should be getting this extra money,
What are your guys' experience, because a lot of us have stumbled on embezzlement sort of things, as far as somebody like inner circle, known and trusted, be it mostly family members that are doing it, versus, just the receptionist clipping a $20 bill or something like that. What is the mix that you guys are noticing? And I notice it's about 80% family, and it's kind of disgusting when you think about that somebody would take advantage of anyone, but their own family especially.
Yeah, I think that's where the sense of entitlement comes in, right?
Yeah.
That's how people rationalize that behavior, especially in the face of their own family. Because it's awful. But I've seen in 2008, when the economy crashed, I started getting a lot of cases coming in my door where longtime trusted bookkeepers, which is almost like the same as family. I mean, they're handling very intimate parts of the owner's business, all of a sudden started stealing money. And it's like you think, how could this person have done this after all these years of working and serving faithfully in that company? Why would they suddenly, they don't, I guess maybe they don't see it this way, but they're stabbing the person in the back who has paid their rent for many, many years. And again, it's the sense of entitlement. It's them feeling like, I should have gotten raises and didn't get what I deserve. But if you feel that way and it's justified, then you go speak to the person and say, hey, I don't think I'm being paid fairly. I think I deserve to be paid more. And you present a case and explain all the value that you've brought. That's how you respond to feeling like you're not paid. It never justifies stealing, of course, and I know that's obvious, but I think that's what, where people get caught up. And by the way, in auditing, do you know what is considered the biggest weakness in internal controls? It's a one-word answer.
Trust.
There you go.
Mhm.
That is literally the one-word answer, trust. That is considered the biggest weakness in internal controls. And
Years ago, didn't you ever find the guy? You always get the owner that's like at the stamp, and the bookkeeper has a stamp, so he or she can write a check and just stamp the name. And we worked with one. We came in after where the lady, she bought a house up in New Hampshire. She bought a brand new car. What she did was pretty clever. She took all the bills. It was another contractor, and they had all same Exxon statements and all that. She just paid hers too. So she paid all her bills through the company, just threw that in. And her one fatal thing that she did was she went on vacation. And the credit card company called and said, are you supposed to be paying, Susie, whatever is card two in this pile of bills? And they're like, what? And then she also would call the payroll in. So she did everything, called the payroll in, and she gave herself miscellaneous pay. So she added to her pay. Over the years, she stole $250,000 from this company, went to jail, got her out of jail, and the judge gave her, she was like 45 years old, and the judge made her pay $100 a month back to the employer. She never could possibly pay it. And then she would not pay, and they'd have to go to court, and they bring her back in. She'd go to jail for a little bit, and then they let her out, and then she'd be back to paying the $100. It was crazy. I just felt so bad for the people because they had to work, the owners had to work a little bit longer than they expected to because they were out all that money, and they trusted her with everything. She had the stamp and everything in the drawer, everything. And they were total, when you went to work for them, they had 2 lines on their checks. Even for a $5 check, both people they were overkill because they had that fear factor. It's no, whatever you need to do for comfort. But I can't imagine going to work every day and stealing straight out from somebody like that. And and these people were so nice. How did you face them every day? That never felt bad. I don't know. I can't imagine.
It's interesting what you bring up because it's considered one of the classic signs that, of somebody stealing money from the company, especially if that person is, like the bookkeeper, the controller, or the CFO, is that they never take a vacation because the minute they do and somebody else has to step in, it very easily might be uncovered what they're doing, which is exactly what happened in what you described, Linda. And so that's considered a warning sign. And in some companies, part of their system of internal controls for that reason is that whoever's handling the money is required to take their vacation. It's like some companies you can choose not to take vacation and just get the extra pay. But for the person who's handling the money, one of the internal controls is often that specifically that they are not allowed to, they don't have that option. They have to take a vacation for at least 2 weeks or, whatever they're allowed based on their vesting. So yeah, that's interesting. And I had a client years ago whose bookkeeper, he would frequently like to travel to Florida. And when he would leave his bookkeeper with signed checks so that she could pay the bills without having to worry about it. And, she treated herself to some cash, just checks made payable. At least she was smart enough to write the checks to cash and then cash them directly against his bank account, right? So there is no audit trail. But of course, I know, and the client knows that he doesn't write $500 checks to cash, right? And so we could see that much and know something was wrong. And what's interesting is that the same bookkeeper worked on another client of mine, and that client brought to my attention that she had instructed the bookkeeper to close out one of her credit cards. Instead, the bookkeeper took the opportunity to use that credit card to charge some of her own personal expenses. She bought herself some nice things. And I guess I don't know what she was thinking. Maybe she thought she would pay it herself before the client was aware. I don't know. But when she brought that to my attention, and then I had to confront this bookkeeper about it, and then it started to come out that she also took money from this other client, and the client almost pressed charges, but ultimately we decided to just cut her loose and let her go. And she worked on several of my clients, so I had to inform each of those clients about what happened. And it was interesting too, because when we first confronted her, she at first admitted to taking just 500, then she admitted to 1,000, and then I said, look, I'm about to go audit these books. Now that I'm aware of this, I'm going to be checking everything. So you may as well just give me full disclosure right now. And then ultimately she admitted to having taken 1,500 between 3 different checks for 500 each made to cash. But then now I had to do that audit for every client that I was aware of that she worked on. And it was a mess. And I never really got a good reason from her. The interesting thing was she was immediately able to deposit the money back into his account. So it wasn't like, and Mary in the live feed mentions gambling addictions too, which, gambling addictions I can speak from personal experience being somebody who's in recovery from drugs and alcohol, that gambling addicts, it's the same exact thing as drug addiction. It's just a different thing that you're addicted to. And ultimately it's adrenaline. But yes, definitely gambling addictions can cause somebody to be in a position where they're trying to, steal money to, make up for the gambling debts. But the, what do you call it? I lost my train of thought now. So she was able to replace the money right away, which means it wasn't a situation where she needed it to pay somebody off. It wasn't like medical expenses or drugs or gambling. She had the money. So, and the only other thing I can think of is some people, and maybe this was what happened with her, is maybe she just kind of got off on the thrill of the idea that she, at least for a time, thought that she thought she'd gotten away with it. And she's like, oh, cool, I can get this extra money and nobody's going to know. And you know what? This was a case where trust was the weakness, because she had been a bookkeeper who worked for this client for a really long time. And obviously he trusted her to leave her with signed checks. And he had been defrauded by other bookkeepers before. He really had come to believe that this was finally somebody he could really trust. And then she obliterated his trust. And by that time, I wasn't really working with him anymore. But so he came back to me and he said, you know what, Seth, he says, from now on, for the rest of my life, you are the only person I'm going to trust with my money. And so now he's still a client. I'm stuck with him for life because he knows I'm the one person on this planet that he can trust will never, ever steal from him. And it's crazy to think that, he has to kind of live that way. But his trust has been violated, obliterated so many times. It's not just once. And I don't know how or why this kind of thing seems to be attracted to him specifically, because it has happened to him repeatedly with several different people. And he, like you mentioned, Linda, about your client, is like one of the nicest guys in terms of the fact that if I went to him and said, hey, you know what, I'm a little short on cash, I'm in trouble, can you lend me $1,500? He wouldn't think twice about it. He'd be like, yeah, just write yourself a check.
This is a small firm that I work with too. This is still a client. My daughter does the work, still a client, and like very big family oriented. Now the older owner has passed away, but the son's now running the business, and they're just great people. I know their whole family because I've worked with them for, over 20 years, more than that, because it's been a long time.
Yep. Let's see. Elaine wrote us something in the chat. She says a family business that one son was entitled. The wife did the books and they emptied the account thinking they would put it back. Guess what? A patent issue occurred. Yeah, it's crazy. It's crazy when family does it to family. I had a funny story around that. Years ago, I had this guy reach out to me for some one-on-one trading. And he's like, yeah, it's a family business and, I just need some help cleaning up QuickBooks. And then he sort of, off recording shared with me that he was concerned that somebody, one of his family members might actually be taking money from the business. And that's part of why he wanted to hire me to help him kind of review and clean up the books, and he wanted me to kind of keep my eye open for that kind of thing. Like if anything looked suspicious. So I said, okay. And, I did a QuickBooks session with him. And as has normally been my protocol for many, many years, after the session, I sent him a link to download the recording of our session. Well, at some point after that, I get this email from one of his family members saying, I'd like to know who authorized this rote QuickBooks session. I had to look up the word rote, R-O-T-E. Exactly. I'd never heard that word used before. And it went on, and I wrote back to her, and I know enough about the legal side of things to be dangerous, so I knew enough to know how to respond to this. And I said, well, it didn't appear to me to be a rote session because he clearly had access, and he clearly had all the indications of being absolutely authorized. As you'll see in the recording, which I've sent, which I know you now have access to. He shared his screen, showed me everything. I had no reason to believe he was not authorized to do this. And ultimately I said, I'm very sorry, but I'm not the one you need to take this up with. You need to take it up with him. And I have a feeling that person was the one who's probably stealing money from the family business and was very afraid of what we would uncover. I never heard back on that. I even emailed him and I said, hey, do me a favor. You need to get this stuff, I used a different word, straightened out with your family member here. I don't want to be in the middle of this,
You think you can trust your family though, but what do they say about hiring family?
Well, one of my favorite expressions is that your close friends are God's way of making up for some of your family members.
Yeah. I've had new client interviews with new clients where just the bickering back and forth between the family members was just so insane. At one point, I told them, like, look, I'm going to walk out of here. I'm not going to be your family counselor.
Yep.
And you know what? It's 4 years later, and we're still doing business. So we've hit that nail on the head. We have to kind of smack it around every once in a while, but they're doing much better now.
I had a client just like that years back. It was family run. The father was sort of the visionary and the genius in the operation. And his daughter was absolutely just a sharp, sort of well-witted office manager type person. She kind of ran the company. And then there was the mom, who was a very sweet lady, but she was a bit absent-minded. It was funny because every time she would go to the bank, they somehow managed to convince her to open up another bank account. It would be, how they do, like they'll tell you, oh, if you open up a new account today, you can. So we had all these bank accounts.
Must have been with Wells Fargo.
It actually was. But at least in this case, they told her about it. They didn't just open.
My brother worked for Wells Fargo, man, and every time he got a chance, Craig, you need to open up another account.
Yep. So they would convince her to open up another account, and then we were overdrawing accounts because we were trying to spread the money around to cover all this. And I was, and then the family dynamic started coming into play. And I remember speaking to the father about it, and he's like, well, I don't want to really, she's very sensitive. I don't want to step on her emotions and make her feel bad. So, it was like tiptoeing. But then what it really came down to is they had 1 year where they did really well and made a lot of money. And then everybody's trying to put their hands in the pot and claim, like their share, and this one said that they had done all kinds of things and made sacrifices and didn't take money out of the company. And now they were owed. And it's like, he's the visionary. He's the one who really made it all happen and brought the business in and earned the money, so to speak. The rest of them just kind of managed it for him. But man, that was an interesting one to get stuck in the middle of. And a similar thing to what you described, Craig. I remember sitting there like feeling like, all right, I'm not a family counselor. I'm not qualified for this, and this was the same client who I've shared the story about many times, where after that, for that 1 year when they did really, really well, and he was like, where'd all the money go? We made all this money. Where is it? And I told him, well, you took it out in distributions. And he didn't believe me. And he was just like an inch shy of accusing me of screwing up the bookkeeping and saying, this can't be accurate. You must have done something wrong. And then I drilled into the distributions account off the balance sheet, and there it was, just glaring. It really stands out when you see a payment for $75,000 among a lot of other smaller payments. And he was like, oh yeah, that's right. He had a personal debt that he paid back with that money. And when he saw it, he remembered. And that was a big chunk of, that was actually almost a quarter of the net profit that he was looking to see why it wasn't in his bank account, because he had done like net over 400,000 that year. Yeah, those things can get messy.
That's the favorite question at the end of the year, right? Where'd all the money go?
Always.
If I had this profit, where's the money?
I always use that question as the basis for how and why it's important to understand the statement of cash flows.
Yeah. Oh, sure.
I had a client this week say it wasn't personal draws because the money went into a personal account, but he didn't spend the money. The money is still sitting there.
I would say, okay,
like
then
that
put it back.
reasoning.
I would say, great, then put it back and we'll cancel it out. Right?
Right.
That's hilarious. So Greg, that's one for your list. The things that clients say that make you, like nails on the chalkboard.
Mhm.
Yeah. I don't think that's how it works, but you can,
It's always eye-opening when you send them the drawer, what they took out of the business, and I sort it, and
Yep.
this is what you spent, because I didn't take that much out.
Years
Well,
ago, I picked up a client's books and I remember him telling me, "Oh yeah, it's a really simple business. We have a very simple business model.
Red flag number one.
Simple P&L, yeah, of course, simple P&L." And I'm not kidding. I swear to God, I couldn't make this up. I pull up his P&L, and it shows like his income coming in, and then there's in the expense section of the P&L, there's like maybe 5 accounts. One of them, where most of the expenses was called business expenses. That was it. Just all of it. He was like, "Yeah, I figure that keeps it simple. Business expenses."
It does.
Makes it very simple, very easy.
I'm like, perfect. My work is done here. Let's go file the returns.
Just put all the rules to business expenses.
There you go. That's you know what? We should all start revamping our clients' chart of accounts.
I mean, he's not wrong.
As long as what's in there is legitimately business, and we could drill in and we can group it by payee to make sure, but
If they have a payee, typically they don't.
no, I think they did. I think they actually did have a payee because he was using it to legitimately print checks to pay people, but he was just, if it was a business expense, it got booked to business expenses. And the client legitimately didn't know that it needed any more detail than that. This is the problem with business owners thinking, "Oh, I can figure out how to use QuickBooks," and they know nothing of bookkeeping. And like you said earlier, Linda, it could be a rocket science. You could have Elon Musk come in, and he's as much of a genius as he is. He literally is a rocket scientist. He's probably not really going to understand how to do bookkeeping. It's not about being smart. It's about having the proper background and training in this stuff.
Yeah, it's what they do best. And they are better off to let us do what we do best. We can stay on top of everything too, like things that change. So
that's why we love to pitch it to our clients the way we do. We say, let us do what we do best so you can focus on what you do best, which is probably not accounting and bookkeeping.
Exactly.
I'm the numbers guy, so you don't have to be. That's my tagline.
Yep. It's great. It's great. Another one of my favorites was years ago, a client's vendor asked me to change the amount of his 1099. He flat out told me, "I don't want to report this much. Can you change the amount?" I'm like, "Well, I can, but here's the thing. I have to assume my career is going to end at that point. So the fee for doing this is going to be at least $10 million. That's enough that I can kind of live off the interest. So if you've got 10 million, and you'll get a huge write-off, right, for paying me the 10 million. But that's what it'll take for me to alter your 1099. And I flat out told him in my response saying, "What you're asking me to do is committing fraud." He legitimately didn't think he was asking me to do anything wrong, because I think he even was trying to say, ask me to spread it out, like take the difference and put it over into the next year. And I'm like, yeah, no. $10 million.
Anybody have that client that likes to take their cash basis? So they take their checks that come in at the end of the year and they hold on to them to the following year. So they can record their cash, and then they spend as much money. They write a whole bunch of checks, but they don't mail them.
That's actually very common. That's very common. And the IRS is savvy to that, but they don't necessarily care because they're going to get their money eventually.
Yeah, but you're kicking the can down the road 1 year. Everything else after that is the same. You're just doing the same thing. So you haven't really altered anything other than this is your practice. Yeah. And they'll get their checkbook down, like you're just sitting there going, "Oh my God, their checkbook's going to bounce because they've spent all this money and they've not put the cash in." It's like, I had a client who I had for years. He's not a client anymore, but every year in like November, December, he would ask me if he could prepay me accounting fees for next year. Yeah. And I honestly said, sure, if you want to do that. And I even would tell him, I'd say, look, the IRS is not stupid. They're savvy to this. If you do get audited, they'll see right through it. But if you're, as long as you understand your exposure there, I don't mind. I'll pick it up and claim the income this year. I'm fine with it. I'll pay the taxes. And so I've had that happen on a number of occasions. But I always think it's so like,
I guess the best word I can think of is petty, right?
Mhm.
It really is. It's really thinking small. I mean, if you're going to build a business and grow something and you want to build something meaningful and scale, and you're doing these kinds of things, then your thinking is completely backwards, in my opinion, right? What we should be thinking is, first of all, I don't have time to sit there dealing with holding on to checks to avoid picking up the income this year. You should have bigger fish to fry than that, which is let's use that energy to think in terms of how I can grow and scale and build a huge business. Same thing with the whole S Corp officer salary games that people like to play, right? It's like, no, just you should be grateful that you have enough money to pay yourself that reasonable compensation, and you should be looking to max out those salaries so that you can max out retirement contributions where applicable, where it's based on a percentage of salaries. Just that's where we should be thinking is how can I set things up and scale my business to where I'm making so much money that I hope I have to pay millions of dollars in taxes because I made tens of millions of dollars in income this year. That's the way we should be thinking. Otherwise, just go get a job and
I
get a
have a
paycheck.
client right
Yeah.
now who is spent the last 3 years just trying to get their taxable income just as low as absolutely possible. And then this year they say, well, we want to buy a house now.
Oops.
So I was like, you can't serve two masters. You you've made your bed, now you gotta lay it. So
Yep. I love how our friend Chris Reagan, says, I haven't looked at his website in a while, but I think he used to have it right on his website, that he can guarantee you that you'll only pay $1 in taxes, right?
Yeah.
And it seems like it's this over the top, like, how can you promise that? But the answer is simple. If you spend the money on legitimate deductions, you can spend it down to where you only owe $1 in taxes. That's actually very easy to do if you have the cash and spend it. So anyway, it is 9 o'clock. Thank you, Greg, for the reminder, which means our time is up. But as always, it's been fun. I always love hearing these stories and sharing about this stuff. It's a lot of fun. It's really interesting. And I always learn something, from these discussions. So that's it. Hopefully you all enjoyed it. And next week, we will have, actually, Airtable, I think, is in 2 weeks. I put something else on the calendar for next week, if I'm not mistaken.
Airtable's next week.
Airtable is next week? Okay. Next week is Airtable. We will see you then. Don't forget, every Wednesday, I do Bulletproof Bookkeeping webinars. Every Monday now at 6 p.m., I do Monday Night Madness. And every Thursday morning at 9 a.m., I do the Cash Flow Call. So lots of online little events throughout the week.
Don't forget your squirrel.
And then Squirrel of the Week. I always forget that because it's on Sunday. So Sundays
Yeah.
at 4:15 every week, Matthew and I do Squirrel of the Week, where we look at some app or some feature of some app that's really kind of designed to distract you and make you think, oh, I wonder if this is a shiny new toy I can play with. Of course, in all seriousness, we do it in hopes that you'll find that this will help you, find some of those useful tools out there that can really make your life easier. So that's every Sunday. Just check our Facebook
You're
page.
like on every day.
What?
You're on every day.
Pretty much. I have something going on just about every day now. That is true. Yep. Except Tuesdays. Yeah. Monday, Wednesday, Thursday.
Well, we have 97 and up Tuesdays
I
and
do
Thursdays.
Tuesdays and Thursdays.
That's true. That is true. So yeah, I'm spending a lot of my time in Zoom these
With
days
me.
with Greg. That's right. Greg and I are frequently together in Zoom. We kind of live
Vote
together.
for Seth. Vote for Seth.
Oh God, please. don't.
That's Dennis.
Dennis just all right, everybody. So I will. I'll get this recording uploaded to the website tomorrow, along with everything else I've done this week. And I look forward to seeing you next week for Airtable for accounting firms. That should be a lot of fun.